Charitable remainder trusts, or CRTs, are a valuable tool for deferring, minimizing, or even eliminating capital gain taxes on highly appreciating assets. I'm Anna from Valur, and in this video, we'll explain why certain assets are a good fit for a CRT, and we'll offer some tips and tricks for maximizing the return on your tax plan. So let's get started. When it comes to funding a CRT, assets that have appreciated substantially or are likely to do so in the near future are particularly good fit. This is because the tax-exempt status of a CRT allows you to sell these assets without an immediate tax bill. There are 6 main asset categories that are typically considered for funding a CRT. Publicly traded securities, such as ETF and shares in individual public companies. Closely held stock, such as startup and small business equity. Cryptocurrencies, such as Bitcoin. Real estate, including commercial and residential properties. Alternative securities, such as private equity and hedge fund assets. Art, including paintings, sculptures, and other valuable works. Once you've funded your CRT, you may be wondering what sort of assets you can invest in with the money that grows inside the trust. The good news is that with a few limitations, you can invest in the same asset categories that can be used to fund the trust. This means that depending on the structure of your trust, you can invest in a wide variety of stocks, cryptocurrencies, real estate, alternative assets, and art. Of course, there are some limitations on CRT investment strategy. Trustees are required to follow the prudent investor rule, which means that they must act in the best interest of all beneficiaries. This generally means investing in a diversified portfolio of assets. Trustees are also required to avoid self-dealing, which is when a trustee invests assets for the benefit of only some of the beneficiaries. In conclusion, charitable remainder trusts can be a valuable tool for deferring, minimizing, or eliminating capital gains taxes on highly appreciated assets. They can also provide opportunities for diversification and investing in a modern portfolio of assets. You can fund your CRT and also invest the money that grows inside the trust in assets including public securities, private stocks, cryptocurrencies, real estate, alternative securities, or even art. If you're considering using a CRT, be sure to consider the limitations on investment strategy and the potential returns with a tax savings calculator. All right, that wraps it up. I hope you liked the video. If you have any questions, please let us know in the comments below. And please like, share, and subscribe to learn more about all types of tax-saving opportunities. Now, a quick word about Valur. We have built a platform to give everyone access to the tax planning tools of the ultra-rich like Facebook founder Mark Zuckerberg and others. We make it simple and seamless to pick the best strategy, set up, and administer these structures at a fraction of the cost of competitors. If you still have any questions, you can visit our website at valur.io. You can read our content on tax planning strategies, play with our online calculator to discover your financial gains by picking different trusts, or schedule a call with us.